Talk. My name is Aaron. This week we have Darryl and Lindsay with us. How are you guys today?
Good. All
Good.
good,
Thanks,
man.
Aaron.
Yeah, good. How is lovely Oregon, as our East Coast friends say?
You know, it's right at 56 degrees, a little sunny. It's pretty good. We don't
There
hit
you go.
over, pretty consistent down here.
Consistency is good. I
Yeah.
I have thunder and lightning for the past week and a half, and hail in 100-degree heat. So I don't know what's going on here. Not
That,
consistent. How are
Yeah.
you, Darryl? How's the weather there? It looks beautiful where you're at. I see some sun and
yeah,
trees.
we're pretty good here in the, you know, Seattle area. All the smoke from the fires is blowing east, so our
Good.
friends in New York are actually seeing red sun. So that is from Canada, by the way. I did verify that this morning. It's not from Oregon, and the
Oh,
Washington fires. But we're now doing our smoke forecast reviews to make sure we see what's coming up. So the new August is upon us.
oh my goodness. Okay,
Totally.
well,
Yeah.
we have a full day today, guys. So I'm just going to kind of run through what we're going to talk about today. We're going to talk about what happens in the underwriting process. If you had a chance to join our last two Trio Talks, we talked about all the documentation you need, how to gather it, how to kind of prepare your customer for what's going to happen in this underwriting process. And if you didn't get a chance to watch them, you can watch them on YouTube. You can watch them in the Facebook group. But today we're going to talk about and kind of do a deep dive into that underwriting process, look at the risks, all those things that are needed for that, and we'll kind of go over that. If you have any questions, go ahead and put them in the chat. If you're on Twitter, if you're on in the Facebook group, if we're on YouTube, just do those comments below. We'll see them. We'll go ahead and pop you up on the screen and go ahead and ask those questions and answer them live for you right here. All right, so let's go ahead and get started, and let's talk about what does underwriting look for. And Lindsay, I'm going to throw this on over to you. You're obviously the expert in this. You handle all this every day, all the time. So what does underwriting look for?
Sure. So an application comes in through underwriting once our processing team has reviewed the stated information on the application, collected all of the required documents for that application, and basically has assessed to see, okay, what does this look like? Does it look like a pre-approval? Maybe how much for a pre-approval? Are there any other concerns we need to be aware of? What does the credit file look like? We take a look at all of those things. Maybe there's something on the list that a customer wasn't able to provide for their application that normally we would require. So all of those items get noted and then sent up to underwriting for a final review on that application before we issue out a pre-approval or sometimes, unfortunately, a notice of denial. And so we'll take a look at that application in underwriting, and we're basically vetting that file all over again, making sure that it makes sense, right? Does the income documentation check out? Do those deposits make sense? If it's a self-employed customer, we're taking a run through their tax return to see if that makes sense. And remember, we're underwriting to cash flow. So we're looking at profit and loss and bank statements and making sure that matches up. But we are still looking at the tax return, right? How far is this customer off from being able to have that tax return ready for mortgage qualification in the future? Are they claiming their income correctly? Those types of things. And then a big part of underwriting is also just looking at if there are any exceptions that we need to review, right? If that file maybe doesn't fit quite perfectly in the box, what does the rest of it look like? Does it make sense for us to make an exception on that file if that's something that's being requested?
Yeah, and that's one of the great things about Trio, and what Lindsay just talked about is really important for everybody to understand. I think when you talk about, the package that we're looking for, it is helping us understand the story behind that applicant. And what we really want to see in final underwriting is, does everything line up? Do the cookie crumbs create a story that we can follow, and does the path make some sense to us? Because, you know, we get all sorts of different kinds of cookies coming to us. And so I think that the challenge we have is oftentimes, again, the great thing about Trio is we can work with folks in unusual and different situations, but that also can be the challenge, right? So trying to work with someone who really hasn't had, worked with a proper accountant, where they've got a self-employed business, but they don't have great consistent documentation in their, profit and loss statements or on their tax returns, and for us to be able to put that all together. So as you're working with customers, that's one of the primary things to ask them is, yes, Trio can work with out of the box situations, but we need to have real clear clarity on where their cash flow is coming from. And providing that documentation and the story behind that documentation is super important. And, Lindsay, I think one of the challenges that we have when we end up seeing files that are needing an exception is when there isn't, those lines aren't connected, right? We can't really tell that these deposits going into the bank equate to this income on the consumer's response, and that income has some history to it. It isn't just a blip that they're seeing, this 1 month, right? And then they're asking us to use that income for their qualification.
Yeah, that's exactly right. And that's something that I think helps. We get a lot of questions on, well, you say you don't, look at the tax return, so why do you still require a tax return? And right. Part of that is too for us to see, some longevity, some history, see, what they're currently claiming as income on their tax returns. But then we're also looking at, especially if it's a new business, trying to look at cash flow for as many months as we possibly can. And then for a lot of customers that were maybe impacted by COVID last year, a lot of our self-employed customers were looking at, what do you have that's, even if it's an older business, what do you have from even before then, so that we can see what's your normal income look like in, a standard year where we're not going through a pandemic. And then what did it look like during COVID, and how have you started to recover from that too?
Yeah. And on those tax returns, sometimes the documentation we get for current income isn't that great, but when we get the tax return, we can see that they actually did report some income that makes sense. And so it's like, yeah, we didn't start with the return, but sometimes we'll finish with the return. And in other situations, it doesn't work that way. The tax return doesn't match what they're doing, and that's okay with us as long as we can see the cash flow. So yeah, it is on a case-by-case basis. But again, as agents out there where those time delays happen and someone's complaining because it's taking underwriting or taking processing, weeks to work with their customer, that is because the documentation isn't clear. If we have a clean file, clear documentation, it's going through quickly. So if you're having delays, that's the question to ask is there, any issues with the documentation that my client's providing to you guys? How can I help assemble that in a way that you can understand? Because you're able to communicate and sit down with that customer. We're not flying out to each of our markets to sit down with that customer and go through their documentation. So that's something you can do.
I've had many conversations with agents that, say one thing and sometimes the documentation says something else, right? Or vice versa, or they may have an extra sort of circumstance to kind of explain maybe that the documentation doesn't explain why there was, a gap in income or anything like that. Do you recommend that customers and agents write a letter of any sort or anything like that?
That can be really helpful sometimes, especially if there's multiple streams of income, or if a customer has changed positions or changed jobs recently. Helping us understand those types of transitions can be super, super helpful. Or helping us understand how their business works. How do you generate income to begin with? Because we do have several customers that, run online businesses, maybe where they don't have a lot of expenses, but if all we're getting is a profit and loss that only shows profit and no loss, we're going to have some follow-up questions to that, right? There's got to be something. We have to understand how that works for them.
I'm also going to invest in that company. Right? So.
Yeah, exactly. How do I do that? Yeah. So a letter of explanation can be super helpful for us.
Yeah, and I think that's a good point. I mean, and we're talking a lot on self-employed, but what is the business? How does it make money? How do you do your deposits? And those sorts of things seem simple, but oftentimes we have no idea. So we're trying to piece that together on our side, and it's bouncing back and forth between processing and underwriting because those questions aren't answered.
And I think people need to realize too, if they're working with Trio, it's usually some extra circumstances, like you said, self-employed, relocation, new job, things like that, that sometimes do make it hard to find that documentation. Sometimes it's much easier, but like you said, if it does take some time, that means it's not laid out in a way that makes sense, or that we're still trying to gather like you said, Darryl, the breadcrumbs for this. Lindsay, can you go over rent shock for a second? I've heard some agents use it before, but I'm not sure everybody understands what exactly you mean by that.
Sure. I mean, it's really just defined as a big jump between what that customer is currently paying in their housing payment and what we're looking to approve them for, what they could qualify for based on their debts and their income. So when there's a really big jump like that, our main concern at that point becomes the customer adjusting their budget to be able to accommodate that larger payment. And so that becomes an added risk for us. And so that is one of the times where we might go back and ask some questions. We might limit an approval depending on the strength of the rest of the application. We might require some additional deposits for an approval for an application like that. We've also had customers come in and document that they can deposit that full lease amount that they can qualify for so basically they pay their housing payment and then they deposit the gap between their housing payment and their new lease payment that they want to be qualified for into a savings account. And they can show us that they can budget for it, because that's our main concern, right? So to do that over a number of months, and that can be helpful for us sometimes as well.
Yeah, and that's a great point, because when we see someone who's, say, making $6,000 a month, they're paying $900 in rent, and they're looking for a $2,200 housing payment, but we see that they're spending all of their money every month, right? It's hard for us to then say, how are you going to fit that into your budget? And they say, oh, no problem, I can do it. We can't see that math working, other than what a lot of us need to do when you buy a house, which is not eat out every day and some of those basics, right? I'll not talk about that today. But that, example Lindsay gave is a perfect way to help us understand that you can do that. And the other is to look at prepaying some of your rent. So deposits or prepaying. And if you have a customer that is on the edge in terms of their documentation or their qualification, oftentimes, if they're, say, willing to prepay 3 months worth of their payments, that gives us a cushion to know that if they do run into trouble, that they've got a prepaid cushion into our accounts, that we know that we've got some time to work with them to figure things out. And so those levels of assurance, I guess is the right way to put it, on any of the questionable files are great things to talk to your customers about. So it isn't that we're not willing to take risk. We take on a lot of risk every day. And that's the fundamental charge that we have, is to take on more risk than mortgage lenders, right? We have to look at all of these things with these customers. And then at the end of the day, oftentimes we're just making a judgment call. They're not meeting our criteria straightforward, but we're looking at it and saying, all right, are these folks a good risk? And at that decision point, having some additional prepaid in, or a suggestion from the customer on how to help us feel that they're going to be able to, make their payments on time and take on this new obligation, is what we need to be able to get over the top on some of the applicants. And obviously, we're talking about the more challenging apps here, right? We get a lot of folks that just fly through and their credit's good, and we've got good documentation on their income, and and it's easy for us to track. And that's not what we get caught up in these conversations.
I just want to point out, you're talking about, we do take on a lot of risk here at Trio because of that. But all those things that you were talking about is trying to mitigate any sort of risk for the customer, right? Making sure that they
Right.
can make their budget, making sure that they will get to that final goal of becoming the homeowner. The goal is, just there's several different steps. And the first step is to get them in the house to make sure that they can do that. But we also want to make sure that they get to that finish line and become that homeowner. And if they're not saving that money, if they're not budgeting correctly, it's probably not going to be able to happen. Right. And so really, really, we're trying to really look out for the customer here and their long-term benefit, not just, getting into that house right now. Right. There's a lot of extra things kind of looking in there.
Yeah. Thanks,
Let's see.
Aaron.
So
That's great.
yeah, just looking here, we talked about credit file and history. We talked about ability to budget and savings. So we've kind of covered all those things right there. What can limit a customer's ability there we go. What can limit a customer's ability to get pre-approved? There's obviously, I'm sure, a whole list. And we've got a list right here. So Lindsay, I'm going to kind of throw this on over to you, kind of go through each one of these, make sure everybody kind of understands a lot of the things that we are looking for and the red flags. And like you said, Darryl, these are more extraordinary circumstances, but we do see these quite often, right? So yeah, go ahead, Lindsay.
Sure. Yeah. And, I think the general theme of everything we've talked about is that we're looking at the application holistically, right? We're not looking at just one thing or can you check these 3 boxes and okay, you're good to go. We're looking at every single piece of that application and trying to make a final decision on, like Darryl said, whether this is a good risk for us or not, and whether it's also a good risk for the customer, right? Are they going to be able to carry this all the way through? Is this going to be a successful program for them at this time? And so I think really our last resort is to issue a notice of denial. We don't like to do that. We don't want to do that unless, we of course have to do that. So I think a lot of times if a customer we feel is almost ready or has an additional challenge or has an extraordinary circumstance, we might still issue that pre-approval, but we're going to limit it down to an amount that we feel is safe for that customer. And some of these items that are listed on the screen here are why we might do that. So especially somebody, we keep coming back to self-employment because it is, one of the things that we work with so often. And I think we do very well, but it is also a risky income type for some of our customers, especially when they're in a new business. They've just started it. And so there really isn't a lot of longevity. And so we might limit them down to, rather than a 38% front-end DTI, a 34% front-end DTI or something like that to make that a little bit safer, give them a little extra room in case there are some fluctuations in their cash flow. Same with relocation, especially if they're changing jobs with their relocation, right? It comes with additional expenses. And so we want to take a look at all of, what their income was, what their income is going to be at their new job, and make sure we're accounting for a pretty safe budget on that relocation, taking into account the fact that they're going to have to pay for moving expenses most likely, and any move, even if a company sponsored move, there are additional expenses with that. The same with, a bankruptcy or foreclosure short sale in their past history. That's a situation where we also might limit their DTI down to maybe 32%, just to make sure that we're keeping that in a safe limit. And same with these others down below.
Yeah. And I think that's exactly it. We're looking at that individual situation and their story, right? So these are story issues, and we're looking and saying, all right, they want a second home. They, at least require a higher amount of income and their, obviously their debt income on the front end needs to be adjusted to accommodate that. And in some cases, we're matching that with budget. So, we're looking at the customer's cash flow and seeing what is reasonable for them. And, that's again part of the education process. And Aaron, you did a good job, reemphasizing that we want them to be successful. And, when I say we evaluate risk, that's the risk in them not being successful, right? And us having to step in and help out in many cases with our hardship programs, or help out and trying to work with them in some of our markets. We have folks that have change in situation with their income, new jobs where they're making less money. And we're actually doing that right now. I think, Lindsay, we're actually relocating one of our families into another one of our homes that's more cost effective for them. So we do whatever we can to work with our customers. We're not like a lot of the companies out there. We're not in this business to accumulate rental properties. We're in this business to facilitate home ownership. And so we do these evaluations. We're not trying to get people just in the door that can get qualified up front, find a house, and then collect some payments, and then they struggle, and we kick them out and take the house. That's not what Trio's about, right? That's the last thing that we want to do. So a lot of our evaluation in our underwriting is to ensure that we have a successful situation. And when a customer is frustrated that we're not expanding their approval up to that more expensive, shiny, brand new, next modeled home, it's because we want to make sure they're going to be there for the next 10 years, or 3 years at least, right? So it's taking our perspective and helping customers in their situations.
Absolutely. I mean, you want to make sure that just because you get approved for a certain amount doesn't mean you have to go right up to that limit, right? That means you're approved anywhere within that range, but obviously the lower you go, and I know that's a concern, obviously, for agents and customers right now with home prices going up. Everyone's trying to go up to that limit as much as possible, right? So it makes sense right there. But in terms of what Lindsay was just talking about, why does a customer get approved for less than they thought they might be? Mm-hmm. This kind of gives you a little explanation right here in terms of relocation or bankruptcy, or maybe they make less than they thought they did, or whatever it might be, or maybe there's less income coming in than loss, right? So there's a lot of different things that they're kind of being factored in there. And as you said, that 38% might go down to 34 or even 32, depending on that risk. But again, it's to make sure that customer is safe. Again, like you said, Darryl, to get in the home, but for the long term, not just for that short term to get them in that property. So we're really trying to think of the long-term goals for this customer. And if it is to become that homeowner, we're here to help them out and obviously provide them the tools and education, but making sure at the beginning that they have a budget and I guess framework set up for them that is not going to give them any sort of, like you said, Lindsay, earlier, rent shock, right? To make sure that they are in a safe sort of situation.
Yeah. And I just want to kick one more thing out there on this topic, and back to my earlier points about what helps out. So if we come back with somebody and say, hey, look, we don't think that's reasonable for you to increase up to this amount per month, there are things they can do to help mitigate our risk, right? They can prepay some month's rent. They can find a nice, clean new home that isn't going to have maintenance issues. So those are some of the issues that when we look at the risk, it's not just can they afford the payment, but if they're looking at an older home that's going to require a lot more maintenance or potential issues, we're factoring that into that decision. So if you're an agent working with a customer that's in the situations that we're discussing right now, those are some things that you can prepare them for. Co-signers are really not that helpful for us because they don't live in the house. So if there's a default, not often are those co-signers stepping in and making a big difference for us. So yeah, that's some help. It's better for that co-signer to advance some funds to our customer rather, and have them put that in as additional prepaid rent for us to help in terms of making any exceptions.
That's a great point. All right, our last point for today, and I don't have a slide for us, so I'm just going to remove the slide here. But our last point for today is, what may require, those additional funds, security deposits, last month's payment, or anything like that. What would cause that, or may require that for the customer? Lindsay, I'm going to throw this one on over to you again.
Sure. It's a lot of the situations we've covered already today, right? So rental history, whether that rental history has maybe a late fee on it somewhere in that history, or it's not fully documented for a full 24 months, or the documentation is broken, but the rest of the application looks clean. We might allow that to go through, but require some additional deposits because we can't see that full 24-month history. Somebody having a second home is also an additional risk to us, especially if that second home still has a mortgage payment on it, right? So then we have to make sure that they're able to cover both of those housing payments. Now it's not just one, now it's two, and you might have it rented out, but what if that renter defaults? Then what are you going to do? Are you going to be able to cover that? So that's an additional risk for us where we might require some additional deposits as well. And then also a comment just on credit history and credit score. We do have those minimums in place, but I think, just because they meet the minimum on their application doesn't mean that that's going to be an approval and be approved to proceed forward. We're also looking at payment history on that credit report. Are they paying their car payments on time, their credit reports on time? I see Kona there. Hi, Kona. She's come to hang out with us. And are they, being responsible with the amount of credit limit that they have on their credit cards? Are they maxing out their credit cards and then just making the minimum payments? Or, are they being responsible with the debt that they already have? Is going to be a big factor for us in our review of the application as well. And something where, okay, you meet the score and we can go ahead, you have strong income, we can go ahead and proceed, but we might require an additional deposit just for some added risk based on history as well.
Yeah, that's perfect. And I think
Lindsay, can you kind of, oh, sorry, Darryl.
No, I was just going to say that is something that there's no prescription for this in general. I mean, there certainly are some steps that we take in terms of second homes and higher DTI, et cetera. But I think the rental history one is where I wanted to emphasize again. And again, this is something that you guys can do on your own before they make application with us, is ask them the simple question, do you have a ledger from your landlord that shows your payment history? Yes or no. That single answer will go for at least, I don't know how many days of additional delay that will solve. Because when we just get copies of money orders, or I pay cash, or, those are the challenges that we have in underwriting that, again, you guys talk to us about delays. If you can ask that simple question up front, that will help you be prepared at least, and get that customer prepared on how to document that, right? And if it is something that they pay out of their auto pay and their bank statements, then that's great. You can just get those screenshots and have them highlight those and send them to us. If they're working with a third-party landlord, it should be, again, they should have a ledger. I mean, most people do track the fact that they earn rental income on that house. They've got to report it to the IRS and all of that stuff. So, that's a huge thing for us. If we can't see rental income history that's consistent and stable, that's when you're going to see more denials. You're going to see more LMP, more security, all the rest of it. Even with a super clean applicant, if we've got a 780 credit score and we've got W-2 income, but we can't substantiate that they've paid rent on time, we're going to have a challenge with that, right? So just emphasizing that for all of you. Again, it's something you can do up front to prepare your customer. Review that document and go, can I tell that they paid their rent? That's all you have to ask yourself. Can I tell that they paid their rent and when they paid it? And if you can say yes, great, then send it over to us and help us understand it if there's anything there. But if you say no, then we're probably going to say no. So anyway, just a little bit of frustration sometimes that we have on rental history.
Well, this is a great question then, Darryl. So I'm talking with a lender right now who wants to help out a customer. They just relocated, so it's already one of those sort of red flags for them, right? And because of COVID, and I've seen this a lot more, heard of this a lot more during COVID, they were living with a family member right? And so they were paying that family member, some sort of rent, whatever that might be, right? And so what sort of documentation, obviously, it doesn't sound like there was a ledger, unfortunately, for
Well,
this sort of situation. What would
yeah,
you recommend for that? Can we look at bank statements
you're going to look
or what?
backwards. So, Aaron, we're
Yeah,
never going to get substantial documentation for someone living with family. It's just not going to happen. But
yeah,
if we look back before that and look at their rental history before they did that change, that'll help out because then we'll be able to see that they
perfect.
do have history of on-time payments. We're not concerned that it was in the last 6 months, and with COVID, you're exactly right. A lot of people had different situations, and so we are looking around COVID to get some assistance on that.
Yeah, and
Perfect, perfect.
I think a lot of folks too, when they let us know that they've been living with family, oftentimes maybe they have contributed some kind of rent, but maybe they haven't. And
Right.
I think something that's important then for us to see, savings at that point of you weren't paying any housing payments, but did you contribute something to your savings in that time? Because oftentimes we'll see that, well, I've been living with family, so I could save money to buy a house. Great, show us those savings. How far did you get with that? Were you able to deposit some income in there so that we can kind of use that as a way to also budget what they might be prepared for or not?
Yeah. And if they just had a loss in income, we understand that too. And we'll look
Exactly.
around that. So it's like, yeah, we had to move back in with family because we couldn't afford to pay rent. And that was a good decision instead of what's happening today, which is people are just not paying their landlords, which is a
Exactly.
challenge.
And in all those situations that we just talked about, a letter might help out that sort of situation, right? And Lindsay, how can an agent or how can a customer submit that letter?
Just through the regular document upload onto the application. Just attach that all together. Make sure it's signed, please. And then have that submitted in. Our team will take a look.
Perfect. Perfect.
Yeah.
Well, we're almost out of time, and I just kind of wrap this in a bow real quick. So it's always good if you're the lender working with the customer or if you're the agent working with the customer to please go ahead and review the documents before making the application. It's not a requirement for you to go ahead and work on the application with the customer, but as you can see, there's usually a lot of questions, and you as the expert in what we're looking for, what we're looking for, you can provide some guidance for that customer, right? So that's always really, really helpful. And also to prepare your customer, obviously, if they've got everything in order and it's a pretty clean file, this is going to go through pretty quickly. But to kind of prepare them if they do have those extra circumstances that we just kind of talked about and that we kind of highlighted a lot more today, right? Prepare them that this may take a little bit longer in the underwriting process, right? That's definitely going to just so that they can get their timeline in check, right? We have a lot of customers that come to us and say, I need to move in 2 months or I need to move in 9 months, right? There's no in between, it seems like. And unfortunately for these extra sort of circumstances, we're going to need a little bit more time so that we can fully understand their situation and do that underwriting. Well, Darryl, Lindsay, thank you so much for joining me today. Really awesome to have you. Thank you to everyone that joined us. Hitting our half-hour mark. Perfect. So we did it. So thank you again. And again, if you have any sort of questions, we often get this question, where do I submit my questions? You can do it inside the Facebook group if you're an agent. But if you have questions about a specific customer or a specific transaction, something like that, you'll definitely want to call the office. You'll definitely want to write into the office, info@thinktrio.com. That way, somebody on our processing team can look at that file and work with you on it. All right, folks. Thanks so much for joining us today. We'll see you here in 2 weeks. Bye-bye.
Thanks.
Thank you. Bye.